Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday, so please make sure, if you haven't already, to like and subscribe and press the bell notification button so you don't miss the latest cryptocurrency news. We have an awful lot to discuss today. Let's take a look at the price of Bitcoin. It's not looking too good on the last 24 hours. We are down 1.63%, down to $27,250, and we have Ethereum down 2.21%, down to $1,834. The last 7 days haven't been brilliant for the cryptocurrency market, but overall in the last 4 months, we really cannot complain. And we have seen a slight move to the downside, but hopefully we're just consolidating, testing some of those levels of support, and then we can start moving back to the upside. So let's take a look quickly at, well, not quickly, for quite 20 minutes, I'd say, the cryptocurrency news, and then we'll get onto the price of Bitcoin and go through the Bitcoin chart, do a little bit of chart analysis and see what we think we could have in store for this week. And we'll also take a look at the CME gap for the weekend as well. So let's get into the latest cryptocurrency news. First of all, we are discussing KWON. So KWON's lawyers have rejected fraud allegations from the US SEC. Now, KWON got charged with spreading misinformation, for saying things that were just outright incorrect, and for what's the correct term here? Let's see what it is. Let's start from the beginning. Defrauded US investors is something that he was alleged to have done by the SEC. Now, his lawyers have come back and said this is all wrong. The SEC regulate the US, and this isn't targeted at US investors. So this is the wrong jurisdiction for the SEC to be pressing charges for. So they're saying all of these charges are just outright wrong. Let's take a look at this article. We can see here that, according to a report from Wall Street Journal, KWON's lawyers insisted in a court document filed on Friday that the SEC exceeded its authority by suing the terror creator and his company. And the report also stated that the SEC had failed to prove that they defrauded US investors. So they're saying this isn't your jurisdiction to regulate, so the SEC are just out of their place. So we can see here that the attorneys argued that the lawsuit was out of the agency's jurisdiction, as the CEO did not directly market his cryptocurrencies to Americans. They said Terra USD, UST, and Luna are not regulated by the SEC, insisting that UST was a currency, not a security. So interesting arguments to be made here. If they can get out of being in the SEC's jurisdiction, it could be a really easy way to get KWON out of a huge amount of charges. So we can see here that the SEC is being accused of taking KWON's remarks out of context by his KWON's attorneys. So the lawyers disputed the SEC's claims that KWON made false statements to prove that UST was stable. In the lawsuit, the regulator referred to a May 2021 incident when UST plunged to about 90 cents and recovered within days. While KWON tagged the occurrence as evidence of the stablecoin stability, the SEC claims he failed to disclose a deal with an unmentioned US trading firm that agreed to boost the asset's price. So KWON's legal representatives believe that the developer is not obligated to reveal all the transactions that help support UST's peg, and that the agency must have taken his remarks out of context. They also disclosed that the unidentified trading firm's actions accounted for nearly 6% of UST's transactions during that time and did not play a significant role in the token's recovery. So if KWON's legal representatives can worm out of this situation with the SEC in the US, and they can prove that the SEC have no legs to stand on, it's out of their jurisdiction, the comments they're making are incorrect, they could wipe a huge amount of problems away for KWON fairly quickly as well. So this is a really interesting storyline and something we really need to keep an eye on. So let's move on to the next article now and see what's coming up on this, but we will keep us all up to date on this story as it unfolds here on the Crypto Saving Expert YouTube channel and on our news pages as well at cryptosavingexpert.com. So make sure to check that out if you haven't already. Let's move on to the next one. We've had a video from the World Economic Forum in the last couple of days, and they've turned into an advocate for Bitcoin mining. Very interesting article here. So we can see here that they're recognizing the economic and environmental benefits of Bitcoin mining. So they started supporting some aspects of the crypto market and mining in recent times after criticizing crypto for its high energy consumption. But now, if we zoom down a little bit to this part of the article, we can see here that they are saying that cryptocurrencies could eliminate natural gas flaring from oil fields and landfills. So we can see here that the cryptocurrency mining can help oil and gas companies mitigate waste and emissions that impact the environment. So since then, we've seen MicroStrategy's chairman Michael Saylor noted that the World Economic Forum is recognizing the environmental benefits of Bitcoin mining. The community asserts crypto mining and Bitcoin mining is more energy efficient now, as mining companies have switched to renewable sources of energy, making the process far more suitable. So let's discuss this, because Bitcoin mining has been in the news a lot, and this is what mainstream media like to point out about Bitcoin. Bitcoin mining takes a huge amount of energy. Bitcoin miners need to push so much energy into their mining rigs to try and compute the complex cryptographic puzzle as quick as possible. And they're in a race to do this. So the more energy they can push into those mining rigs, the more likely they are to mine Bitcoin and earn that Bitcoin reward. Now, this obviously can seem very bad for the environment, and previously it has been. But these miners are trying to become more environmentally friendly as time goes on. We have seen problems with this. In 2021, Elon Musk said that Tesla would accept Bitcoin as a form of payment. And just weeks later, he put a pause on this, and he said, we can't continue to move forward with this when it's not environmentally friendly to mine Bitcoin. We need to see things improve in that sector, and then maybe he'll start that scheme again. So we are seeing big players saying, come on, we need to make this more sustainable. And if we can get there, then we may see a huge amount more adoption for Bitcoin. So saying that the World Economic Forum have recognized Bitcoin mining as and see its benefits, this is definitely a positive thing for Bitcoin. And hopefully there's more to come, and we can continue moving forwards with the energy resources used to mine Bitcoin and become more and more friendly for the environment. Let's move on to the next article now and see what else we have in store today. Before we do, please don't forget to like and subscribe and press the bell notification button so you don't miss the latest cryptocurrency news. Today we are going to be talking about AI. We're going to be talking about Twitter. We've seen a few different things on Twitter over the weekend. Pretty interesting. We will get onto them in just a second. So Texas have passed another cryptocurrency bill, and this seeks to introduce proof of reserves. So let's take a look at this. So they want to ensure that exchanges provide proofs of reserves, and they want it to be maintained so that we can all have a bit more trust in these centralized exchanges. Now, obviously, this comes after FTX filed for Chapter 11 bankruptcy in November last year. This created a huge amount of fear around the cryptocurrency market. A lot of people have lost trust in centralized exchanges, but we want to see here how we can regulate them in the correct way so we can still bring new users into the space via centralized exchanges, because they are one of the most user-friendly ways and a brilliant way for users to get involved in the space for the first time. So we can see here a bill that was first introduced in January was passed by the House on Thursday, which will now see the motion put forward to the Senate, with the bill then requiring the seal of approval by the governor. And the bill overview states, relating to the commingling of funds by digital asset service providers, providing for an administrative penalty, creating a criminal offence. So within the bill, two criteria will determine if an exchange or platform qualifies to be put under the regulations. So if it serves more than 500 digital asset customers or has at least $10 million in customer funds, they will need to prove that they have the reserves they say they have. So that's a really positive thing coming from all of this. The amount of regulation and the amount of transparency that we're about to see in the space is going to grow massively. And obviously FTX was an awful time, and the whole of 2022 in fact was an awful time to be in cryptocurrency. We are learning from those mistakes and building a better industry because of it. So it's still really important that it did take place so we can continue to learn from those mistakes and make sure that investors don't get hurt like this in the future. So we can see here that proof of reserves bills passing comes a month after it was reported Texas was preparing a 0% tax on crypto bill. We've also seen them create a bill that protects Bitcoin miners. I believe that is Texas as well. So we do see Texas moving forwards within the cryptocurrency space. It is incredibly positive over there, and a lot of positive bills coming for crypto in Texas. I'm sure we'll see some more news coming from Texas within the next couple of months being pro-Bitcoin. We could take a look at this next article here relating to FTX's losses. So in Ontario, teachers' pension funds avoid crypto after $95 million being lost in FTX. And this is obviously something we're going to see as well. As I was just saying, there's loads of positive things that have come from the problems in 2022, and we can build a better industry because of it. However, Unfortunately, some people are just going to be scared away from cryptocurrency for a long period of time, and some investment funds are as well. So one of the largest Canadian pension funds has decided to sidestep the crypto sector after writing off a $95 million investment into bankrupt crypto exchange FTX. And that is something we are going to see, unfortunately, as well. And that is why we saw a huge drop in the market when FTX did move to, into Chapter 11 bankruptcy. We saw a lot of fear into the space. A lot of people move out of cryptocurrency, and we're still seeing some big decisions like that as well. But let's move on to the next article here. So we have Tornado Cash creator scheduled for bail on Wednesday pending trial. So he will await trial from his home under surveillance. Now this is a really interesting debate to be had here, because essentially, the Tornado Cash developer has created a cryptocurrency mixer. What this does, it means you can send your cryptocurrency to a mixer. It can mix up all of these transactions and then send your cryptocurrency out again. So you lose that trail on the blockchain of where your Bitcoin has come from or where your cryptocurrencies have come from. So it removes that transparency aspect from the blockchain. Now, this is a really interesting concept. The developer of Tornado Cash created this cryptocurrency mixer and deployed it onto the network. It's a concept that he's created. Now, as you can imagine, cryptocurrency mixes like Tornado Cash have been used by malicious actors. They've chose to use it to allow themselves to launder money or do other problematic things. So we can see here that actually the Tornado Cash creator has been charged with some certain things because he created Tornado Cash. Now, this is something I don't agree with, because he's created a piece of code, he's made a new concept, he's made a project, and he's deployed it onto a network. All he's done is write the code. What happens with that code afterwards? Is that his fault or not? That's the debate to be had. People are using his project maliciously, but all he did was make this new concept where we could mix together all these transactions. And there are other cryptocurrency mixes out there. But let's take a look at this article anyway. So we can see here that he will be released on bail on Monday. So he will have electronic monitoring devices installed in his home and wear an ankle monitor as a condition of his release. However, he will not be required to provide any financial security. So we can see here, let's get this correct. The Dutch court previously argued that Tornado Cash creator posed a flight risk and could conceal evidence if he were to be released from custody, but they have chose to anyway. So he's been detained since August 2022 following his arrest by the Dutch Information and Investigation Service on suspicion of his involvement in concealing criminal financial flows and facilitating money laundering through Tornado Cash, a decentralized mixing platform on the Ethereum network. The Dutch authority said it opened a criminal investigation into Tornado Cash in June before arresting the developer. So his arrest also followed a decision by the US Department of Treasury Office of Foreign Asset Control, what a mouthful, to sanction the mixing service for allegedly allowing criminals to launder around $7 billion in crypto assets since 2019. So because of the usability of the cryptocurrency mixes to remove the trail of where cryptocurrencies have come from, it basically allows people to launder money, and they can see here the estimation here is a huge amount of money. Whether that estimation is correct or not from the OFAC, I'm sure we will see. But it's an interesting concept here because he's created a piece of code and moved that onto the deployed that onto the blockchain, onto the network, and now all of these charges are coming through his way. It'll be interesting to see how this one plays out, and I've been waiting for that one for a while. It'll be interesting to see. Let's move on to the next cryptocurrency news. Please don't forget, if you haven't already, go over to cryptosavingexpert.com, press this big blue sign up button, and if you tick here as well, you get access to our newsletter every single Tuesday at 11 a.m. BST time. So if you do it today, you'll get access to that newsletter tomorrow. Don't forget to do that. So let's take a look at this article. We have cryptocurrency exchange Gemini to launch a derivatives platform for non-US traders. We've also seen news that they are going to aim to move into Asia as much as possible as well. So what's happening here is the regulation in the US is just getting so difficult. Gemini did get accused back in January of offering unregistered securities by the SEC in the US, and the lack of clarity around regulation in the US is making many cryptocurrency exchanges move out of the jurisdiction. We're seeing that with Gemini as well, moving into Asia and launching products for non-US citizens. So we're seeing here that they are offering a derivatives platform, with their first contract being a Bitcoin derivatives contract. So we are seeing them move forwards. They are going to do the same for Ethereum as well and continue to build. Gemini has been in the news a lot recently, but we are still seeing positive things coming from this. And I expect to actually see a lot more cryptocurrency companies moving out of the US in the next couple of months, because they just can't keep up with the industry with regulation. And if they're not going to have regulatory framework that is clear, transparent, and allows the industry to go, these companies will simply just move to other jurisdictions, which is allowing them to grow in a safe and fair way. So these companies just don't want to be in a position where they could get charged out of the blue at any point in time. They want to be somewhere where they know they're following the regulation and they're moving forwards. So that is what we're seeing now with Gemini. And we can see here also they are expanding their operations to Asia. We did just speak about this. Let's move on to the next one here. We have California regulator cracks down on AI-related crypto Ponzi schemes. Now, we've got a couple of articles on AI today, so let's discuss these. The fraudulent entities promised high returns and misrepresented their businesses and operations to investors. So the California Department of Financial Protection and Innovation, or another mouthful, has issued cease and desist orders against 5 Ponzi-like entities who claim to trade cryptocurrencies with AI tools to stop them from defrauding investors. So according to a press release, the DFPI discovered the actions of the 5 entities and their operatives violated California securities laws, and they offered and sold unqualified securities and misled investors through material misrepresentatives. So the entities presented their business as high-yield investment programs that generated remarkable returns by trading crypto assets with AI. While soliciting funds from investors, they used multi-level marketing schemes that rewarded users for recruiting new customers. So it's looking like a Ponzi scheme sort of thing from these AI-generated platforms. We will see much more coming from AI in the sector. AI is causing a huge amount of problems in everything. We have more articles on AI, so let's discuss this next one here. We have 36% of AI researchers think artificial general intelligence could cause a nuclear level catastrophe. So Stanford University recently published its 6th annual in-depth report on artificial intelligence named The State of AI in 2023. And the report compiles a diverse range of data on AI, including analysis of large language and multimodal models, trends to international legislation, and public and professional opinions. So the report's scope coincides with a year that's seen an explosion of large AI models such as ChatGPT, Midjourney, Stable Diffusion, and DALL-E 2. And these AI models can analyze and manipulate text, create images, and perform speech recognition tasks. So alongside this revolution comes concerns from the public and governments about the speed at which the technology moves and whether it needs to or can be controlled. Now, we did see in an open letter some major players within AI try and put a pause on giant AI while they try and see the risks involved. So we've seen here Elon Musk, we've seen Chris Larsen, and we've seen many other senior cryptocurrency executives and ex-executives and other notable academic figures ask the US government to consider a 6-month pause on AI research. And this is why while they tried to see the risks involved with it, we did also see Italy ban ChatGPT over its alleged breach of data privacy laws. So we've seen a huge amount of concerns around AI. We've seen it overtake so many jobs already. I've seen a huge amount on social media about people getting paid huge amounts of money just to be able to have proper conversations with AI and benefit more from AI. So these people know the commands that AI should take in order to get the best response. And companies are just hiring these people that can properly work with AI to get the best it can from AI. So very interesting here. I'm sure we will be using it more and more in our day-to-day lives as time goes on. If you want to know more about this, make sure to go to cryptosavingexpert.com and go to this article here. In fact, I will put the link to it in the chat if you want to take a look at it after today's stream. Very interesting article there, and it goes into a lot of depth of what the future could be with AI. It's really interesting here because AI is obviously created by developers, but it seems like developers are putting themselves out of jobs very, very quickly before anybody else. Let's keep an eye on that though. Let's move on to the next piece of news. So CZ has warned many of us about the risks of tricks used by meme coin promoters on Twitter. So CZ followed a couple of people back to, I think this was mainly towards January when he was tweeting the number 4 about no FUD and all of the rest of it. He followed a couple of profiles on Twitter, and now it seems that multiple accounts that he has followed have chosen to sell their accounts to meme coin creators, and then the meme coin creator can make this project, create a meme coin, and then say, look, CZ is on board with our project, he follows us on Twitter, when all they've done is buy a Twitter account that CZ already follows. So CZ has seen this multiple times now, enough that he's actually put out a warning to be very careful, and accounts he follows may not have been the same account he chose to follow at the time he followed, if you get what I'm saying. So they're the concerns that he has there. So this is just an extra point to do your due diligence and be careful. And just make sure that you research as much as possible before you choose to invest in specific cryptocurrencies. Let's move on to the next article here now, though, to see what else is going on. We have KWON users lost over $22,000 due to the exchange's Twitter account hack. Now, they lost access to their Twitter account for around 45 minutes, and $22,000 was lost by users of KWON. So now we are seeing them reimburse all of those users so they can continue forwards. I mean, in the grand scheme of things, in the world of cryptocurrency for KWON, $22,000 is not that much, so I'd be very, very shocked if they weren't reimbursing their users. I'm sure they'll be doing a lot of research now to try and find out how they lost control of their Twitter account. They do now have control of it back, so it is all under control, but another disappointing thing to see here. Let's take a look at the next one. I'm sure you're all aware of this. If you're on cryptocurrency Twitter, you will have seen that Twitter has removed blue check marks for all legacy verified accounts. So these are accounts of public figures. So those that had blue ticks before the scheme came in, where you have to pay $9 a month, I think that was $7 a month. That before that came in, a few people had blue check marks to begin with, and those original check marks have been removed now. So there's been a lot of discussion about that over on Twitter. Let's move on to the next article now, though. We have Trust Wallet to refund users who lost $170,000 in security exploit. So to claim their stolen assets, users must fill out forms and get verified by Trust Wallet's customer support team. So again, in terms of cryptocurrency accounts, $170,000, I imagine, isn't that much of a big loss for Trust Wallet, but it's important that we can see that they reimburse their customers who have lost funds through the platform. So Web3 wallet provider Trust Wallet has announced that it would reimburse users affected by two exploits caused by a vulnerability in its open source library, Wallet Core, in November 2022. So we can see here, according to a blog post, the security researcher discovered that WebAssembly vulnerability through Trust Wallet's bug bounty program and reported it to the platform's team, and the wallet's browser extension uses WASM in Wallet Core, so the bug affected several wallet addresses. But we are saying now they are committed to make users whole when it's due to their mistakes. We will invest all losses from exploits incurred from the vulnerability that impacted wallets created in the browser extension between November 14th, 2022 and November 23rd, 2022. Only a very limited number of addresses suffer from the exploits, and we have identified the full list already. So they are moving forwards with this, and hopefully this will all be sorted as quick as possible. Moving on to the next piece of news here, we have Bitfinex seeks $385 million in restitution from crypto shadow bank Crypto Capital Corporation. So Bitfinex is seeking to recover its funds that were mismanaged by an executive of the shadow. Let's take a look at this. Cryptocurrency exchange Bitfinex is seeking more than $385 million in restitution from overseas-based Crypto Capital Corp, a crypto shadow bank that functioned as an unlicensed money transmitting business and mishandled customers' funds. So according to a court document filed on the 20th of April, they're seeking a return of the funds stolen by an executive of Crypto Capital Corp, and the exchange also requests the return of legal fees and expenses related to cooperating with the US government in investigating these crimes. And so that is a huge investigation going on there. I'm surprised this hasn't had as much media coverage as it has. I expect it to have more media coverage than it has. So we can see here that Bitfinex disclosed that it worked with Crypto Capital because the bank portrayed itself as a licensed and regulated financial institution, but their claims it was an inappropriate bridge between crypto exchanges and the US banking system. So very interesting there that they've managed to get away with this for so long. So in the following months, Crypto Capital alleged made up lies to make Bitfinex believe its funds were safe and secure. The shadow bank claimed that the delay in releasing the exchange's money was caused by new banking relationships and 2017 tax issues. So what we are seeing here is a huge problem. Hopefully those funds will get sorted out, and whether they get that $385 million in restitution. Will be very, very interesting. Let's move on to the next article, the final article before we go on to the price of Bitcoin. We have Bitcoin's $26.7 thousand or $25,200 level support needs to hold to maintain a bull market narrative, according to this analyst. So let's take a look at the price of Bitcoin now. We have just been rejected by a level of resistance, but let me pull up the Bitcoin CME chart here so we can take a look at that. So if we go to BTC1 exclamation mark, we can see the Bitcoin. No, we can't because I'm not logged in. Am I logged in? I should be logged in. BTC1 exclamation mark. Let's try that again. Launch chart. No, I'm not logged in. We'll have to do it on this one after. I'm logged in on this page, I'm sure. We can see here we have a previous level of support that is now acting as a level of resistance, which is this range here between 27,880 and 27,700. We have now been rejected from that once again. We do have a level of support down here at 26,900 and 26,600. So between this range, I'm expecting us to find a level of support, and we are currently using this as a level of resistance. So we may bounce between this range for a period of time. If we break below this level of support, we'll have to look for more levels of support below us, but right now I'm expecting these to be pretty strong since they held us pretty nicely back up this period of time towards the end of March. If we do manage to break through this level of resistance, I'm looking back up at this range here at around 28,600 to 28,800. We could just fall back between this range that we were in for a couple of days back here, until we can make a decision on whether we can continue moving to the upside or not. We do have a CME gap up $35,000. We have one down at $20,300. Let's pull up the CME gap here quickly. We can see here that the CME gap from this weekend was just here, and it has already been closed. We have closed that, so there's no concern there about the CME gap for this weekend. No magnets below us other than that one down at $20,300. So just to keep an eye on. Jason Smith just commented in the chat, has Bitcoin closed the CME gap yet? Yes, it has. If we take a look at this chart here, you can see that the CME gap was from this point here. The candle closed here on Friday at $27,290. We opened on Monday at $27,425. So we've already traded within that range this weekend. So that, in my opinion, is nothing to worry about. We just have that bigger one down here at $20,400 and up here at $35,150. But this move to the downside, I don't feel as much fear in the market as I expected. Let's take a look at the Fear and Greed Index and see what's going on over here. If we take a look at this, we can see we're at neutral at 53. It has come down since the price has moved down. The prices of cryptocurrencies have moved down significantly in the last couple of days, but overall, we are just creating some levels of support, retesting previous levels of resistance, seeing which one of these hold. This isn't a negative thing for the price of Bitcoin. Every time we see consolidation, every time we see a little bit of a pullback, we're supporting the price of Bitcoin so that we can continue to move forwards. We're never going to move up in a straight line, and we have to remember that. But overall, the price of Bitcoin is looking healthy in my opinion, so we will have to see what else is in store. That is all really we have for today's stream, so thank you very much for tuning in. As always, please don't forget to like and subscribe and press the bell notification button, and I will see you back here tomorrow with more cryptocurrency news. I hope to see you all then. Goodbye.